Today I would like to talk to you about what you should expect during the loan process. During the loan process, there's a lot of things that happens. The first step, of course, as we've talked about before, is getting pre-qualified. So let's go ahead and fast forward. You're pre-qualified and now you're wanting to decide what should happen, how much you should bring for closing cost and down payment. Now we're at a very important step. The reason why is, used to, the seller was paying all the closing costs for the buyer. Nowadays, that is not happening anymore. So the conversation has switched to what your expectation should be that you should be bringing the closing day. If you're doing an FHA loan, 3.5% of the sales price is what you should expect, plus the closing costs. Now you can say, how much are the closing costs? I've heard that there's 1%, 2%, or 3%. There's not really an accurate number for that. What we have to do is, once we know a sales price, we can get with a title company or a title attorney and we can pull down their fee sheet, plug that information in, and then we can be within a 10% variance as far as what the closing costs themselves are. However, your escrows can change depending on two things. One, you have to shop for homeowners insurance. So there's only thing that we're doing is guessing in the beginning. The second thing is on the house itself. Let's just say, for instance, somebody lives in the house, they're disabled or they're elderly. A lot of times the counties will give tax breaks. So if we go off that scenario and we might be guessing a little low, then when we get the title commitment back, it can be quite a bit higher. So that's some of the questions usually that we will ask the realtor in the beginning. Who lives in the house? That way we can gather more information. So the most important thing is, one, we get you pre-qualified. We let you know what the expectation should be as far as what you're going to need to bring to the table. The third thing is the interest rate. Interest rates, we're in a crazy time right now. Rates have jumped up over 2 points since January. We're expecting another increase next month. You know, somebody said, where do you think it's going to end? I wish I had a crystal ball, but it would not surprise me if we're, by the end of the year, if we're at 7%. Never thought that I would see that again in my lifetime, but we could possibly be there. I don't focus so much on the rate as I do the overall picture. If you look at what rent is costing you right now, it is extremely high. It is always, most of the time, unless you're in a rare situation, the 1%ers, most of the time it is better for you to own your own home. The reason why is you're building equity. You're paying back yourself. The home values average go up between 4 to 7% a year on average. That's a good return on your investment. And plus, you get to live there, you get to hang pictures, put nails on the wall, paint the house any way you want. It's your backyard, not somebody else's. You're not having to argue over that kind of stuff that happens in most places where you're renting. So I'm going to ask you, had you rather rent and pay somebody else's mortgage, or had you rather own and pay your own mortgage and build equity in your own house? Call me at 423-316-3570.